Hello guys, welcome to my channel. This is Eunice Financial Academy. In today's video, we are looking at the practice question and solution on ledger account. So before we get into the question, we said a ledger is a summarized transaction of different accounts or a particular transaction. So today we are going to see how we can post a transaction into a ledger account. So not posting from the journal to the ledger, no. So let's go to from the transaction to the ledger account. So before we start our posting, I want you to understand that the golden rules of accounting is very important to remember when doing your posting. So first of all, you need to understand that you debit all the expenses and the losses, and you credit the incomes and the gain. You debit the receivers and you credit the giver, sorry. You debit what comes in and you credit what goes out. And also remember that in each transaction, there are two accounts. In each transaction, there are two or more accounts, please. So always try to identify the different accounts in a particular transaction. And make sure that you determine the account that is increasing. Remember, the account that is increasing, you debit it. And the account that is decreasing, you credit it. And also make sure to keep the accounting equation in balance, meaning the debit side must be equal to the credit side. So let's look at the question. So the first question says, paid cash for rent, $1,800. So remember, cash is an asset and rent is an expense. So the two accounts in this transaction are the cash account and the rent account. So we have a ledger account for the cash and the rent. So we paid rent, we are paying rent. So rent is receiving, cash is given to rent. Remember, debit the receiver and credit the giver. So this is the giver and this is the receiver. Cash is the giver and rent is the receiver. So if rent is receiving, what is rent receiving? Rent is receiving cash. So since rent is the receiver, we debit the receiver. So we come to the rent account. We debit cash of 1,800. Remember, all the amounts are in dollars. So in the rent account, we are debiting cash because we are paying for rent. So in the cash account, cash is given. So debit the receiver and credit the giver. So what is cash giving? Cash is given to rent. So we come here to the cash account. We write rent. How much? 1,800, all in dollars. So this is the debit and this is the credit. This is the giver and this is the receiver. So we are done for the first transaction. So let's look at the second transaction. The second transaction says receive cash from sales, 300. So if you are receiving cash from sales, we have the two accounts here. We have the cash account and the sales account. So the cash account is the receiver and the sales account is the giver. So if we are receiving cash, remember, debit the receiver. We are receiving from who? From sales. So in the cash account, you write sales of $300. And then in the sales account, sales is the giver, cash, $300. So that is how the transaction is. So you identify the two accounts and you create different ledgers for a particular account. So that is how we do it. So the next transaction says bought furniture, $5,000 cash. So the two accounts here are, we have the furniture account and the cash account. So remember, in the account, like for instance, cash account, you are not going to do different cash account for different transactions. No, there is just one account for, or one ledger account for each account. So the two accounts in this transaction are the furniture account and the cash account. So we are buying, the business is buying furniture. So furniture is coming in. So cash is given to furniture. So if we are buying furniture with cash, it means that the cash account is reducing because the cash is going out of the business, and the asset account, which is furniture, is increasing. So now we go to the furniture account. So we bought the furniture for cash. So we write here cash of $5,000, and we go to the cash account. In the cash account, we write furniture. The description is furniture, $5,000. So the next transaction say paid cash to suppliers, $6,000. So we also have the supplier account here. This is the supplier account. So we have the supplier account and the cash account. So if we are paying cash to suppliers, it means that cash is leaving the business. So we credit the giver, which is cash, and the description is supplier, $6,000. And the supplier is receiving. So we debit the receiver. So we have cash here, $6,000. Yep. So that is it for that transaction. So the last transaction says invested cash, 10,000 or $100,000 in the business. So the two accounts here are the capital account and the cash account. So if we invested $100 into the business, it means that the business is receiving cash, and the business is receiving cash for capital. That means it is capital. So in the cash account, we put it as capital of $100,000, and in the capital account, we credit cash, $100,000. So after doing all your transactions, you need to close all your ledger accounts. So when closing the ledger account, remember the asset account have debit balance, and the expense account to also have a debit balance. The liabilities have credit balances. So let's look at the cash account. So if we sum this, we are going to arrive at this amount: 100,300, the same amount here, and then the closing balance. If we sum all of this, we'll have 12,800. So if we subtract the 12,800, we have 87,000. So we have 87,500. So this is the closing balance. So the cash account here, for the rent account, so we put balance carried down of 1,800. So we have 1,800 and 1,800. So we go to the sales account. Here we have balance carried down, that is the closing balance, 300. So we have 300 here and 300. So we also have the furniture account, balance carried down, all are in dollars. We have 5,000. So 5,000, and we have 5,000. So we have the supplier account too. We have the balance carried down, which is $6,000, meaning we have 6,000 here and we have 6,000 here. So we have the capital account, balance carried down. We have $100,000. So $100,000 and $100,000. So this is how we close our ledger accounts. So thank you for watching, and see you in the next video.